Okay, so now I'm going to ask you a series of questions. These are the things that are showing up every day. We hear about it, and they're kind of finance related. And I want to know, your perspective on these schools of thoughts. I mean, we already talked about cutting costs, so that's good. So the other thing that is going on that we all hear all the time is preserve cash, preserve cash, preserve cash, which in a way it means spend less, stretch your runway. What is your take on that?
I think before I reserve cash, I will have a good set of books, and I will do budgeting.
Okay.
Having really strong financial is way more important than reserving cash, because if you reserve the cash and you don't know how to use it, you might use it in the wrong way and then lose it, or you might not be able to utilize it. And the last thing you want to do is have cash in the bank that's not being used either.
Okay.
In the business. You need to be able to utilize every penny to the correct budget. So having really strong financial is crucial to any business, especially in recession, especially in those unseen time. And do a budgeting and forecast. What if I lose 20% of my business? What if I lose 50% of my business? How am I going to survive? And the only way to know the answer to that is through a strong financials.
Okay.
So, go ahead.
No.
Before reserving cash is definitely strong financial, and understanding your financial 100% is so much more crucial than reserving cash.
So when you talk about financials, understanding financials, are you talking about cash flow, income statement, balance? What are you talking about?
Sure. So the income statement is the step number one that you need to look at to see and compare it. Look at it for the past 10 months, month by month, do your P&L statement and see your consistent expenses there. See what goes up and what goes down and why. And look at your payroll cost. The other thing I analyze a lot is payroll cost. Here's my production, here's what I'm bringing, and here's my payroll cost. Is everybody being utilized at 100% of their time, or do I have a lot of floaters out there, they're cashing a paycheck and they're not producing? So analyzing payroll is extremely important out of your P&L statement. Analyzing your marketing. Look at it for the past 3 years. We're getting this many new clients every month, and this is how much we spend in marketing budget and advertisement. Well, a year ago, look at our marketing budget was half, and we got more clients. So there's something wrong here. So let's look into that and reorganize. Are we using, what sources are we using for advertisement? So those are the first two things that I would look at. The third thing will be in the P&L statement is cost of goods sold. If you have cost of goods sold and inventory and you're keeping inventory, you need to analyze your income ratio to those inventory. If you're at 50% for the past 6 months, but before that you were at 30%, there's a lot of ways, might be some issues there in your financial you need to figure out.